Are 50-year mortgages coming to the US? And if they do, would they actually help buyers or just drive home prices even higher? Hi everyone, I'm Katie Grindon and welcome back to my YouTube channel, Live and Invest in the Pacific Northwest. Today, we're diving into this buzz around 50-year mortgages and what they could mean for affordability, equity, and long-term wealth. Let's start with why this conversation is happening. Affordability has been one of the biggest challenges in today's housing market. The logic behind a longer term loan is simple: stretch the loan, lower the payment, and help more people qualify to buy. Some countries already offer 40 or even 50-year mortgages. For example, Japan has offered them for decades, and some are even multi-generational loans that can be passed down to children who inherit the home. And in the UK, 40 and 50-year fixed rate loans have become more common, especially in high-cost markets like London, as a way to help younger buyers get a foot on the property ladder. So it's not a brand new idea, it's just one that's starting to get attention here in the US. Does it really make homes more affordable? Yes and no. A 50-year loan does lower your monthly payment, which can make home ownership feel more attainable, but here's where it gets interesting and a little counterintuitive. When you extend the loan term, you're not actually making homes cheaper. You're just spreading the same debt over a longer period. That lower monthly payment means buyers can now qualify for larger loans with the same income. For example, someone who can afford a $3,000 monthly payment might qualify for a $500,000 home on a 30-year loan, but closer to a $650,000 home on a 50-year loan. So while it feels like more homes are affordable, what's really happening is that more buyers can bid higher, and that puts upward pressure on pricing. It's a lot like what we saw when interest rates were historically low. Buyers suddenly had more purchasing power, and that extra affordability pushed home prices up because competition increased. In other words, a longer mortgage might make it easier to buy, but it can also keep prices elevated because the pool of qualified buyers expands without increasing the supply of homes. And if this type of loan does make its way to the US, it'll probably start small, maybe offered to first-time home buyers or in high-cost metro areas where affordability is stretched the most. So the idea might be less about replacing traditional loans and more about creating a targeted option to help people who are currently priced out of the market. Now, if everyone could utilize this kind of loan, it could definitely change how people approach real estate, especially investors or buyers focused on monthly cash flow. And that's where things get interesting. This type of loan might make sense for investors focused on monthly cash flow rather than quick equity, buyers planning to refinance when rates drop, anyone with long-term hold strategies who just needs lower payments for now. In those cases, it's simply another financial tool, not necessarily a bad one. You should be cautious if your long-term goal is to build equity quickly or pay off your home early. A 50-year loan in those instances probably doesn't align with your financial goals. That longer timeline means slower wealth building and a lot more interest paid over the life of the loan. If 50-year mortgages become available, I hope to see them utilized as a tool that helps buyers get into their first home more quickly and help close the affordability gap. That would be the ideal use for that type of loan, in my opinion. If you're thinking about buying, be sure to consult your real estate agent to help create the strategy that works to your best advantage. I'm Katie Grindon. This has been Live and Invest in the Pacific Northwest. Don't forget to like, subscribe, and hit the bell so you never miss my next update. Thanks again for watching, and I'll see you soon.